Welcome to part 6 of the Big Score Take Action Plan, getting your mix in check. Just like the perfect pot of minestrone, a little bit of something can add depth and interest, while too much can really detract from the overall mix. It's the same with credit. The reason why it is so important to be picky about the lines of credit you establish is because once you open that line of credit, it is on your record for a very long time. The mix of your credit accounts for 10% of what goes into your credit score. So what does this mean? The credit scoring system is programmed to analyze different types of consumer credit accounts, and consumers need to prove that they can manage multiple types of credit, each which has different rules and agreements. So there's really no standard perfect mix of credit. However, the key is to have as much high quality credit as possible with a good blend of both revolving and installment debt. And today, I'm going to give you some great tips on making sure that your mix of credit is in check. Well, first, in order to prove to the scoring system that you know how to manage revolving debt, you must have active credit card accounts. Now, I agree with most financial experts who say that not using credit cards is better for your budget, especially for those who do not have discipline when it comes to spending. But Fair Isaac & Company, the creator of the FICO model, ensures us that without revolving accounts, consumers cannot maximize their credit scores, and there is no getting around it. So the advice I give to my clients is to look at their credit cards as tools, not luxuries, especially now at this time in our economy. Unless they must have access to credit or a credit card for business, they should use the card for gas and groceries, that's all. In addition, the dollar amount of the limit doesn't influence the credit score one way or the other. It is the balance to limit ratio that matters. And my point is that when adding new credit or a new credit card account, apply for a low limit and one that doesn't leave room for overspending. So if you don't have a credit card, let's go over some ways that you can get one. Well, the first place that you should go to is your bank. Whether you have an established relationship with a representative or not, it is wise to go into the bank directly, because if you try to inquire over the telephone, in most instances, the customer service representative you will be speaking to is located in a different state or sometimes in a different country. It's very likely that they don't have a clue about the products that are being offered by individual branches. Ask what type of accounts that they offer for their clients who are trying to rebuild or reestablish their credit, and be direct. Tell them what your credit scores are so that they can tell you if you qualify before they pull your credit. You don't want to incur a hard inquiry if you can avoid it. If your bank does offer a credit card program, make sure that they report to all 3 credit bureaus every 30 days, and make sure that the fees make sense. Now, if your bank does not have a program like this, or does not report to all 3 credit bureaus every 30 days, then it is time for you to apply for a secured credit card. For new credit users or consumers who have filed for bankruptcy or have closed all of their credit card accounts, a secured credit account is a very good option. Secured credit card means that you put up your own money as collateral. It looks, feels, and works just like a regular credit card, and is considered a major credit card by the scoring system. Again, the dollar amount of the limit doesn't influence the score one way or the other. So it is the balance to limit ratio that matters. Point, again, when adding the credit card, apply for a low credit limit. I have seen credit scores increase by as much as 50 to 60 points in the first 2 months of my clients using a secured account. And after managing your credit card account and paying it on time, you can ask for your initial deposit back, at which time that account becomes a regular unsecured account. Now, as a word of caution, you want to try to stay away from department store cards and pre-approved offers that you receive in the mail. When trying to improve or reestablish credit or build new credit, you should apply for a major credit card only. The final way to add a revolving account is to become an authorized user on a family member's or a spouse's account. With the new guidelines from FICO as outlined in the New Fair and Accurate Credit Transaction Act, there is a lot of controversy about whether or not authorized user accounts still help establish credit. But my experience proves over and over again that they do if you carry the same last name as the credit card owner. Now, I strongly advise that you build your own credit if possible. Doing so will give you power and control. But as a last resort, the authorized user option will help. Now, to maximize the benefit of this option, make sure that the account you're being added to belongs to someone you trust, has no negative history reporting on it at all, has and keeps a balance under 30% of the limit, and is at least 2 to 3 years old. Now, a few more tips that I would like to share with you about getting your mix of credit in check are: If you're in a position of needing to open a couple of credit card accounts, you should either open them within a few days of each other or at least 60 to 90 days apart. The credit scoring system is easily manipulated, and if it sees that you are opening multiple credit accounts in a short period of time, you will appear to be in financial trouble and you will be red flagged. Another great tip is to opt out of receiving promotional credit offers. Quality credit is essential to maintaining high credit scores. Opting out of receiving misleading pre-approved offers will not only protect you from receiving unauthorized hard inquiries, but it will also prevent you from applying for low-quality, high-costing credit. You can opt out by calling the number on the screen, 888-5-OPT-OUT. Now, the next tip is that if you have a home equity line of credit showing as a revolving account, you want to write to the credit bureaus and ask them to change it to installment or other. If they don't make the change the first time, try it again, because you will eventually prevail and your credit scores will show the reward immediately. Now, since most American Express cards are considered open accounts, it's best not to rely on this type of card to establish new credit or to fulfill requirements of your mix of credit, as we've talked about here today. And finally, auto financing is a great way to prove your credit worthiness and will help your mix of credit. So avoid paying cash for a car. If you don't have an auto loan on your profile and cannot get an auto loan at this time, a co-sign loan is always a good option. Generally speaking, the mix of credit is not a big determiner of whether or not you will get credit, but it can certainly help you achieve better credit. And with the hurdles being raised ever higher for consumers to improve their scores to gain loans, it is certainly well worth focusing on every point. Thanks for tuning in to today's session of the Big Score Take Action Plan. Remember, the professional who sent this video to you is someone who is committed to not only helping you find that perfect home or qualify for mortgage financing, but is also committed to your overall financial health. And credit is a big part of that, more than ever before. So if you like this information, call and say thanks, and we encourage you to share it with your family and friends. You can also visit my site at creditresourcecorp.com to learn more about credit score improvement and to order your own copy of my book, The Big Score, Getting It and Keeping It. This is Linda Ferrari saying bye for now, and remember, it's never too late to take action.